a lot of people, we hear the term accredited investor. So let's go ahead and define, first of all, define what an accredited investor is and what that means and why that's more your target market or who this is best for.
Yeah, so it goes actually back to, everything's a story with me, sorry. So what happened was, growing up, I had a very humble beginning, right? I grew up in 1,000 square foot, 3-bedroom, 1.5 bath house. It was a ranch. I mean, it was nothing special. I didn't have a country club Rolodex. I didn't have any of that stuff.
Yeah.
So as my career in real estate kept going, at some point I said, man, I could do this so much faster if I raised money and syndicated or used a fund structure to do that. I said, but here's the problem. I don't know a lot of people with money. And so I had to figure out how I was going to outwardly market what we do. And so when you look now at the SEC exemptions that are available, so there's basically 2 exemptions. One's called a 506B exemption. One's called a 506C exemption. So basically what it says is it gives firms like ours access to regular people who want to invest, and it gives people who want to invest their money access to us. There's the Jobs Act of 2012 opened that whole process up. But under 506B, you could have accredited investors in your fund. You could have some non-accredited or accredited investors in your fund, but you couldn't outwardly market your fund, your syndication. And I'm like, man, this is tough because my Rolodex is empty. I don't, relatively empty. I don't have it. So I got to do some marketing. Well, that's what 506C came along. 506C said you can market, but you can only let accredited investors in your fund or in your syndication or in your investment or whatever it is. So I wanted to tell that story as to how we got to that accredited investor part of it. Now, so what does it mean to be accredited investor? It means basically there's 2 rules. There's other little ones, but I'm not going to get into those. You either have to make $200,000 in the last 2 years and expect the same this year, or 300 with a spouse. Or rule number 2, you have to have a net worth of $1 million without counting your house. So if you meet one of those 2 standards and you're able to just somehow do something to prove it, right? Usually your CPA writes you a letter or something like that, and we put it in our file, then we can let you in our fund, let you into our syndication, and we're off to the races. So the SEC made a little carve out, I'd like to say for guys like me who had to, really had to reach outside of his immediate circle of influence to try to find investors and to grow our company.
Yeah, and that's really for everybody's protection, right, Ken? I mean, the investor and yourself, as the company offering the investment, correct?
It is, yeah. So on the investor side, I mean, you want the investor to be able to afford to do the investment, right? Real estate's not a liquid investment. I mean, I think it's a wonderful investment, but you can't call me up tomorrow and say, okay, I want out. Can I have my money back? I mean, you just can't do that.
So
yeah, right. Yeah, you can't do that. So it is important that the investor be, equipped and qualified in terms of financially. And then from our standpoint, it's important because we want to make sure that we're, if all of our investors were kind of living on the edge, right, and something were to go wrong with that, that's not a good situation for us as an investment firm, right? We don't want people to be in a position where they have to call us up and say, hey, you know what, I need to fix my driveway. Can I have some of my money back? See, that's not good for us either. We want, I'm all about matching investors and investments. And so that accredited investor criteria, that kind of goes a long way to help us match those 2 things up. And if you like the content that we've shared here, please be sure to subscribe to our channel and hit the bell. So thank you again and have a wonderful day.